The most important point in this text is that the market's reaction to the Consumer Price Index print and Federal Reserve's policy rate decision in March will be crucial to momentum traders. Any positive rallies are likely to be short-lived. This article provides a comprehensive overview of the events that transpired in the cryptocurrency market in March, highlighting the key factors that will ultimately determine the direction of the market. It also provides a detailed analysis of the current market conditions, including a breakdown of the key data points and their implications for the market. Furthermore, it outlines the potential trading strategies that investors can employ to take advantage of the current market conditions. Overall, the article is a valuable source of information for investors looking to gain insight into the cryptocurrency market. Ethereum Classic has been on a bearish trend since February, with the RSI and CMF showing signs of oversold and capital inflow respectively. A test of the $18 level of support has seen a bullish reaction in the past 3 months. But, it remains to be seen if March will be the fourth such instance. Shorting Ethereum Classic around the $18 mark is not feasible in terms of risk to reward. The 1-hour chart on OpenAIs also shows bearish momentum with the CVD and OI falling over the past 2 weeks. This article provides an in-depth analysis of the current state of Ethereum Classic's price movement. It outlines the various price points that could be important in the short term as well as important indicators such as the RSI, CMF, and CVD. Overall, the article offers a comprehensive look at the risks and rewards of Ethereum Classic and provides a clear outlook on its current state. Scott Chamberlain predicts 5 potential outcomes of the legal battle between Ripple and the U.S. Securities and Exchange Commission over whether Ripple's XRP token is a security. The dispute is centered on whether XRP is a security or a currency. These include a summary judgment in favor of Ripple's Chris Larsen and Brad Garlinghouse, a summary judgment regarding overseas sales, and a limited scope focusing solely on Ripple's sales of XRP in the U.S. Additionally, there is a possible settlement. Overall, Scott Chamberlain's predictions on the outcome of the Ripple vs. SEC case offer a unique insight into the legal proceedings. His 5 possible outcomes range from a summary judgment in favor of Ripple's executives, to the case being limited to only U.S. sales, to a settlement between the two parties. While only time will tell how it plays out, Chamberlain's predictions provide a useful framework for understanding the potential outcomes of the case. Bitcoin's supply cap is an essential part of its brand, and any change to this would require a consensus from developers, miners and users. Industry players and institutional investors have credited Bitcoin's scarcity as a hedge against inflation. It is estimated that the last Bitcoin will be mined sometime in 2140. This article does a good job of exploring the nuances of the potential to change the Bitcoin supply cap and the implications of such a change. It examines the technical aspects of the debate, such as the code and the miners, and its potential impact on institutional investors and the cryptocurrency market. It also highlights the difficulty in predicting what will happen if the cap is changed, and how it could impact the future of Bitcoin. Though the article does not make any predictions on what will happen, it does an effective job of illustrating the complexities of the issue. John Deaton, founder of Crypto Law, has issued a call to action to Ethereum holders. This call to action is in response to a lawsuit filed by a New York regulator against the KuCoin exchange. Deaton believes that Ethereum is not a security. He has given Ethereum holders a chance to fight back by signing up for a document titled "Ethereum is not a security" class action. He has also stated that just because an asset could be packaged, sold or marketed as a security does not make the underlying asset one. This call to action issued by John Deaton is timely and necessary. Ethereum holders must make their voices heard to prevent it from being labeled a security. It is important to remember that just because an asset could be classified as a security does not make it one. Ethereum has already been recognized by the CFTC as a commodity, and the community must come together to protect that status. The Shanghai upgrade is an important milestone for the Ethereum network, allowing users to withdraw their staked ETH from the Beacon chain. This will be accompanied by a series of EIPs. These EIPs will adjust gas costs for various functions, such as accessing a validator's Coinbase address and deploying smart contracts. The upgrade is scheduled to take place in April 2023. This upgrade is a significant milestone for the Ethereum network and has been highly anticipated by the Ethereum community. It not only allows for staked ETH to be withdrawn, but also enables the network to move forward with further improvements, such as sharding and improved gas costs. Crypto traders suffered approximately $307 million in liquidations over the past 24 hours. Crypto markets tanked on news of Silvergate Capital winding down operations. Binance had the most losses at $104 million, followed by OKX and Huobi with $79 million and $45 million respectively. Long liquidations accounted for $282 million of the total, which is higher than the highest daily long liquidation of this year. Bitcoin and Ether were the biggest losers, with $112 million and $73 million liquidated respectively. The sudden downturn in crypto prices caught investors by surprise. The markets had been doing well this year, with Bitcoin reaching above $25,000 at one point. The decline has been driven by concerns about the stability of Silvergate Bank, a key banking partner for digital asset companies. This article provides an overview of the recent liquidations of crypto traders, totaling $307 million in the last 24 hours. It was noted that the majority of losses were seen on Binance, with Bitcoin traders suffering the most losses at $112 million, followed by Ether traders at $73 million. It was pointed out that the majority of liquidated positions were longs, suggesting that the sudden price drop caught many investors off guard. The article then goes on to discuss the recent market movements, specifically the rally in Bitcoin and the collapse of crypto exchange FTX. Finally, it mentions the recent news about Silvergate Bank, a key banking partner for digital asset companies, and its announcement to liquidate its assets and shut down operations. Citron Research has warned that Ethereum will be subject to heavy regulation due to its status as an investment vehicle. They also believe that its current market capitalization is highly overvalued. They point to its security status, recent charity initiatives by Vitalik Buterin, and comparison to other companies to demonstrate how much of a price plunge ETH may be on the verge of. This evidence is then used to make predictions about the future of ETH. This article provides an opinion from Citron Research, a top-tier short seller and research company, on why Ethereum will be the worst sufferer of new U.S. regulatory attacks on the cryptocurrency sphere. According to the research company, Ethereum failed to deliver on its promises of a decentralized network, and should therefore be taxed and regulated accordingly. Citron Research also compared Ethereum's market capitalization to OpenAI, Lululemon, Twitter, Chipotle, and Disney, and warned that it may be on the eve of a 75% price plunge.